Hello and a warm welcome to Money Mind. In an era of uncertainty, commodities and emerging markets are two areas that have remained at the top of investors' minds. We look at the ecosystem of the precious metals market in Singapore and whether we can be a trading hub for such commodities in the region. But first, Jonathan Pieris delves into the glittering world of precious metals. Gold. Wars have been fought over it, empires built over it, and to this day it's seen as a store of value and a safe haven in uncertain times. Gold rose in popularity after the global financial crisis, when investors lost faith in currencies and stocks. Now, some experts are still advocating stocking up on gold as a hedge for the next crisis.
We all have this normalcy bias. We believe that everything is going to continue the way it is. But once we have what might be called a black swan event, it will be too late. And you might find out too late that, a big chunk of your money is gone. Putting maybe 10% of your assets into physical gold is an insurance policy.
Gregor Gregersen saw the potential for precious metals during the crisis and came to Singapore to set up his company, Silver Bullion, in 2009. A one-stop shop for retail investors to purchase and store their silver or gold bullion, he says more and more investors in Asia are purchasing physical bullion to store close to home. With so much uncertainty in the West right now, some investors are genuinely concerned that policies relating to gold could change.
In the United States, this happened in 1933. People were forced to pretty much turn in their gold for $25 per ounce. They had about 2 weeks of doing that. And afterwards, it became illegal to own gold. You could face a $10,000 fine or 10 years in prison. And $10,000 was a lot more money in 1933 than it is today. So a lot of our customers are worried that with there being so much debt in the Western world, there's a small chance that we will have a similar event happening.
Singapore was historically the gold distribution centre for Southeast Asia and remained a hub for the region until 1994, when the introduction of the GST dampened gold imports. In recent times, the Singapore government has taken steps to regain this status as a hub for precious metals. In 2010, they established the Singapore Freeport, a secure storage facility with cutting-edge security. And more importantly, exempted precious metals from the GST in 2012. Market watchers say Singapore is primed to be the gold gateway to Southeast Asia.
If a customer is going to put 10% of his net worth in some vault somewhere in the world, he wants to put it in a place where he can be sure it's going to be safe, in a jurisdiction which he can be sure it's safe. And Singapore ticks all the check marks in order to do that. Singapore is also well defended militarily, and it's a neutral country. So it's very much like the Switzerland of Asia.
We are a middleman. We are a superconductor. The 10 countries in ASEAN has different level of sophistication. Singapore being in the more mature market, whereas we also have middle range market like Thailand, like Malaysia, and we have frontier market like Myanmar. These markets need to connect to the world.
Gold is sourced from 4 places: fresh from mines, sold by depositories or central banks, sold by private collectors, or recycled from pawn shops. This gold is sold either to bullion banks such as JP Morgan, HSBC, UBS and UOB here in Singapore, or to bullion merchants such as YLG. The bullion merchants sell the gold direct to jewelers, to consultants such as J. Rothbart, who specializes in high net worth clients, or to other third-party companies like Silver Bullion, who deal with more mass market buyers. Investors can purchase gold or gold-related products directly from the bullion banks or through these third-party retailers. Throughout this process, The gold ecosystem is supported in Singapore by the presence of transportation companies and storage vaults that specialize in precious metals, and more recently, even a gold refinery. Experts say Asia is now driving the rising demand for gold.
China and India, on the consumer side, they buy almost half of the global demand. Now add other Asian countries like Vietnam and Thailand and so on, you're getting to 2/3 of the demand. So Singapore is a big private wealth management center, regardless of metals. So you have private banks, you have wealth managers, the infrastructure is in place, and a lot of high net worth clients come here and manage their money from here.
While some investors choose to invest in paper gold through futures, ETFs and other financial instruments, owning the physical metal is preferable for others.
It's fully paid. With physical gold, I can go to, it's 24 hours. I can bring my piece of gold to the pawn shop or to the jewelry shop. I want some cash. Immediately it's fungible, it's converted to cash.
However, like all investments, there are risks, and buyers should always make sure they buy their gold from reputable sources and take care to check the authenticity of the bullion.
There are 4 identifying marks for each gold bar. One of them is the refinery name, and it has to be LBMA approved refinery, approved by the London market. It has the weight, in this case 1 kilogram bar, the purity, which for investment is 99.99% pure, and very important is that each bar has a unique number. So this is how, when clients buy gold from us and they store it, each gold bar is allocated per client. And we encourage clients to come and see those bars.
The Singapore Bullion Market Association, or SBMA, is tasked with growing the ecosystem in Singapore and wants to attract more players from every part of the supply chain. They're organising a conference next week in partnership with IE Singapore as part of their efforts to develop and strengthen a unified body in Southeast Asia for the bullion market.
One of SBMA job is to try to help this country to have to harmonize the regulation in all these countries. The objective is to make gold more accessible to the investor.